Hey yo, what's going on? Viewers of the tube, if you're a virgin to this channel, first, I'm Tyler, and you just entered the crypto channel that keeps you more entertained than a drunk Chris O'Dowd on a late night talk show.
It was your birthday this week. Did you stop celebrating?
I feel like nearer to the end becomes more of a celebration because of all of the reasons you've outlined. We went this week, it was my birthday. I don't want everybody to make a big deal out of it. My birthday was a big one, it was 39, which, you know, is a real milestone. And we went to my wife, I'm married, I don't want to make a big deal out of that.
I get it, Chris. We are cousins. My blood runs goofy-noofy. You know, our Irish descent. It's time for Chico Crypto. Well, let's begin today's show off with a tad bit of Bitcoin TA. No, not technical analysis, because I'm not a financial advisor. You should not listen to me, but Tyler analysis, TA, which I base on the fundamentals and by looking at some patterns within charts. So, pulling out Bitcoin's chart since February 5th, it's easy to see what is going on. 10K is such a psychological number. Why do you think within the past 2 weeks we have been under 10K and above 10K 3 times already? Whales, especially on the leverage exchanges, understand human psychology and a number like 10K. Thus, they are going to manipulate public sentiment from bullish to bearish and back. Which is totally obvious when you pull out Datamish's liquidation chart over the same time frame. Green bars are short liquidations, red bars are longs, and it all began on February 5th. Shorts getting liquidated, thus it's bullish, and breaking that 10K level, super bullish, as you had many influencers exclaiming that this might be the last time we ever see Bitcoin at 10K or under. And it's taken back under 10K, which turns everyone bearish, including the tubers, who use all the tools in the books. Lines here, lines there.
Line here, line there, lines everywhere.
Sorry, but these guys pretending to be technical trading experts is not cool, especially for the newbies that watch all their channels. But unlike those guys, I hold my personal predictions for more than a day. I turned bullish on the outset of the coronavirus, with this video posted over 3 weeks ago, titled Coronavirus to Ignite the Next Parabolic Bull Run. Yup, any video that talks about the coronavirus now on YouTube has this information bar in which who tells you what is really going on, aka them trying to censor the real news because Chico knows this is bad. And because of this, I still believe Bitcoin is going to keep pressing above 10K. Might take another dip under as whales get another fat stack of liquidations, but eventually, in my opinion, it's going to blow the lid off this bee's nutch and 10K will be left in the dust. And my number one reason, Chinese investors, small and large, from citizen to conglomerate hedge fund, is going to be looking for somewhere to secure their wealth. Within China's mainland, it's a fragile web of cross guarantees on corporate debt, and if the economy stalls, it could unleash a chain of private defaults in China's industrial heartlands. Which means a capital flight out of the yuan, out of their stock market, and into alternative assets that are not crashing, which can already be seen as people are taking the traditional capital flight methods into another paper currency, the dollar. Just check out the 1 month chart of the dollar versus yuan. Pump baby pump. Which, even before the coronavirus, money has been flowing out of China and into US dollars. But China has been stepping up efforts to combat this. According to this article, the State Administration of Foreign Exchange, a key government regulator, said that its most important job next year is to prevent major financial risks, avoid abnormal capital flows across its borders, and crack down on illegal trading activities. And that is exactly what they have been doing, cracking down. Just over a year ago, China's banking regulators slapped a US $22 million fine on 6 banks violating capital flows, and 800 banks and individuals were penalized in Q3 of 2018 alone. Then the single fine of them all came recently, just a few months ago, when China's FX regulator fined China Bank Payments over $4.18 million, which is owned by the Chinese and now global e-commerce giant JD.com. The reason? According to the article, for illegally transferring foreign currencies from onshore to overseas. So, cracking down on traditional capital flight methods as their economic woes are going to increase, they are going to Bitcoin and crypto, my friends. That is why I am so bullish, as even if the coronavirus doesn't spread globally, it is still going to do oh so much damage to China.
China?
And cracking down on these traditional capital flight systems is oh so good for Bitcoin, and it will only increase the capital flows through Bitcoin, as PeckShield, a Chinese blockchain analysis firm, which you could kind of compare to the United States Chainalysis, put out their 2019 Global Digital Asset Anti-Money Laundering Research Report. And this is what they found regarding capital flight into Bitcoin out of China throughout 2019. Capital flight topped over $11 billion for 2019, beginning weak, but by April, consistently staying above $700 million per month and peaking in July. They found that this total outflow of funds in the past 3 years exceeds 1% of China's $3 trillion of foreign exchange reserves. Also, from the research, they say it should be noted that we only use a few large exchanges to represent the entire country, so the statistical data is only a conservative estimate, and the actual amount of capital flow will be greater than our statistics. Even so, we find the amount of the money flowing out of the exchanges each year is quite huge, exceeding $10 billion. As a reference, China's total foreign direct investment in 2018 was $143 billion. So fundamentally, I foresee capital flights increasing significantly into 2020, which can only mean good things for the BTC price, short term and long term. And now, time for a sponsored segment of this video supported by our friends at the Telos Foundation. As always, the full details of our agreement can be found in the description. So right off the bat, what is Telos? Well, Telos was born out of a problem within the cryptocurrency space. EOS was a highly hyped and massively funded project that had great underlying code, and many DApp developers flocked to it. Unfortunately, EOS has high centralization where a small minority of token holders hold the majority of tokens, whale addresses, which can push block producer selection and the protocol in any way they see. Governance within EOS is broken, and that is what Telos was made to fix. Telos is a fork of the EOSIO code and fixes what EOS stumbled upon in two key areas. Number 1, economic decentralization, no whale addresses. They did this by crediting any EOS account with up to 40,000 Telos. Whales addresses got capped, effectively reducing their power. And number 2, fixing the broken governance and creating a shining governance standard for the crypto industry, which is ravaged by broken systems. Now I'm sure when you hear the words crypto governance standard, the number 10 ranked coin Tezos may come to mind. And yes, they do have an excellent governance structure, allowing protocol changes to be successfully voted on, leading to the recent amazing Tezos price run. And it's exactly why I held my Tezos for some time. But even the gold standard of Tezos can be improved upon, and Telos has done just that. Core code amendments or changes on both Telos and Tezos are democratic and voted on. The difference with Telos is the entire process is much friendlier to the non-technical bunch, as proposed amendments are human-readable governance clauses. You can check them out at tbnoa.org, and each clause is stored as a smart contract on the Telos network, including the technical requirements for block producers on the network, as stability of Telos is of the utmost importance. Governance is further brightened with Telos through a worker proposal system, which they have named Telos Works. Telos Works is a way that Telos users can guide and pay for the development, promotion, and growth of the Telos network. People can easily propose something from DApp development to work on the protocol to marketing. Then token holders get to vote on whether it should be funded or not. And you can view and analyze the proposals with Chain Spectre and use the supported Telos wallet like Squirrel and Scatter to easily vote on any of the proposals. And one of the wallets, Scatter, which was originally built for EOS, has been partially funded through Telos worker proposals. As we can see from this post on the EOS subreddit, it passed, funding them to keep development going of their awesome wallet for both EOS and Telos. So, forking EOS was such a blessing in disguise, as unclaimed Telos in the fork were rolled into a treasury, allowing these things to happen in a fully decentralized democratic manner, while funding on EOS is basically non-existent for small builders not connected to Block 1. But like mentioned, Telos is an extension of decentralized governance, and for the first time in the industry, they implemented a governance engine which can easily be implemented by any DApp. This is called the Telos Decide Governance Engine, and it unleashes the protocol's powerful governance tools upon all the DApps in the ecosystem, ushering a third-generation paradigm of governance in the space. And in many ways, what this is an open invitation to DApps to embrace sound governance processes, with most of the implementation work and effort involved already supplied by the core developer team. Which, if we go to the GitHub, what is supplied is secure ballot hosting, advanced voting methods, custom token treasuries, committee management tools, traceable vote integrity, integrated payroll system, optional light ballots, and profitable worker services. That means the DApps of Telos, like this one, Piranha, a core-type question and answer discovery hub, which pays its users for its contributions, can give its users the power of governance. Then Seeds, which is a regenerative economy DApp, which goes live very soon, is definitely incorporating the governance, as Seeds is an economy plugin that operates on top of Telos, combining the benefits and power of both. Now I'm sure you're like, that is great, governance of Telos might just be better than Tezos, but I can bake with Tezos, and it provides me quite the economic incentive. Well, remember, because of the unclaimed Telos pools, Telos has some of the best staking returns in the industry, as they are able to boost rewards through worker proposals, and I just began staking mine. Now, the final thing I would like to bring up is a coin which has been on my radar for some time regarding their privacy solution. Enigma, as they got hit hard with some major news. They just got a judgment from the SEC that they did conduct an unregistered offering of securities in the form of an initial coin offering, ICO, and they have agreed to return the funds to investors via a claim process, register tokens as securities, and file periodic reports with the SEC, and pay a $500,000 fine. Uh-oh. Now, this isn't good for the crypto industry as a whole, as many ICOs in 2017, especially early on, raised funds from American investors, even big ones like Basic Attention Token. But in my personal view, it was kind of an attack on privacy, but there needs some questions to be answered by the Enigma team. Like, what in the bejesus just happened with your mainnet? Enigma released their own blog post on the debacle, and it just leaves investors more in the dark than anything else. Enigma announces settlement with the SEC and successfully launch of the Enigma mainnet, which if we scroll down is based on Cosmos and the Tendermint SDK, and will include a token swap from ENG to secret tokens. So, are you moving away from Ethereum, or are you not? As just a couple months ago, you guys released this information, which got you on my radar. Discovery, bridging private enterprise and public Ethereum with the EEA logo. And it says the blog was co-authored by Eugene Yarmush and Sanjay Bashki of Intel, of which Sanjay is on the EEA board of directors. So some clarity on that would be a nice gesture, Enigma team. EA involvement. Are you helping with the TCF 2.0 as you said in the blog post? Transparency is key, and a move to Cosmos brings up more questions than answers. Are you using Cosmos Peggy in hopes of interacting with the Ethereum chain? How long has this been worked on? As just a couple months ago, you were talking about Ethereum. Shoot, you were just at EthDenver over the weekend presenting, having developers build a booth, even bounty giveaways. Chico and the army will be waiting. Army, I'll see you next time.